How's it going? Ryan here, and today I'm going to review the two trades that I took on SPY. Today was the Fed's interest rate decision as well as Jerome Powell speaking. I did not trade that event. I traded early in the morning. Had one small loss off the open and one small but slightly larger winner to end up overall green on the day. You can see that on the daily time frame here, before we get into the trades, the levels that we were watching from the daily time frame were that 440, that 442, and that 442.74, which was this swing low I've been mentioning. We have officially broken through that, and we have ourselves a downtrend here on the daily time frame. We have this series of higher highs and higher lows is now broken. We have this high, this low, a lower high, and a lower low. So we're officially in a downtrend here. We'll see if we test this swing low or even to the bottom of this reversal. So potential areas for upcoming days or weeks if we don't break out of this downtrend. With that being said though, I am going to jump into a 1 hour time frame here, and we'll take a look at some levels that I was watching. So like I mentioned, that 442 came from the hourly time frame. As you can see, is a swing high, and then support once we broke above it. The others were off the daily time frame. We have a few other areas. We have supply zones from, I guess that was last Friday. We have supply zone from the high of Monday. We also have the supply zone from the high of yesterday, demand zone from the low of yesterday. We have the pre-market low, pre-market high. We'll jump into 5-minute chart. I trade off the 5-minute chart, so this is what I'm looking at primarily when I take my trades. So off the open, we had a little bit of chop. My very first trade was on the second candle of the day. So that 444 was a big level on, and we'll back it up. We'll show you. If you extend that 444 level, left extension. There we go. Was that the right one? That was not the right one. I apologize. That was 442. This is 444. Alrighty. It's a big level on the daily time frame. It's something that we've been watching as we've been in this price area. Reason being, it was a huge level of resistance on the daily time frame. We broke above it. It was support, broke below it. It was resistance, broke above it, etc. So that 444 was a big level on the daily time frame, which led me to jump into this trade. And it was probably a little preemptive, probably not the best trade. But we opened right at that 444, pushed down, got pushed back up. Second candle of the day, we print up and we retest 444, pretty much right on the dot. I wanted to see us fill the gap up from yesterday's high of day. So we had opened higher than yesterday's high of day and the close of yesterday, obviously. And so I would like to have seen, I was expecting us to come fill that gap before we made any sort of move. I got inputs here before we really confirmed that we weren't going to break 444. I got out on this candle here. I held through here. My stop was percentage based. I bought my contract right at 444, so I had a pretty good entry, and that allowed me a little bit of wiggle room before my stop was hit. But my stop was less. It was like an 8% stop. I had a really tight stop because I got a good fill, and because I knew that my trade idea would be invalidated if we broke and held above 444. So set the stop loss, and we pushed up, and I got stopped out on this candle when we broke up in here. That was my first trade of the day. I lost $9 on that. Like I said, super tight stop loss, single contract, so not much risk there. Especially for the risk to reward if we'd broken to the downside, easily like a 2-to-1 risk to reward there. Still, probably not the greatest trade. Entered, I could say, a little early. Had I waited for this candle to print and then this candle opened up above my level, I wouldn't have taken puts above the level. So I think a little bit more patience would have given me some I guess, would have prevented me from taking a loss. But neither there nor here. I took it because I knew that I could risk very little on that trade, but still probably shouldn't have taken it. The second trade I took, and you can see that I have it charted here, is we sort of flagged a bit, and it was reminiscent, not quite, but yesterday morning we flagged off the open and then broke down. I was watching us flag here. I drew this out. When we broke on this candle, I got in puts again. 443 puts, same day expiration. Normally I don't trade same day expiration, but I wanted to try them out just because in back testing and comparing some of my trades I've taken, realizing that while trading one day out might save me a little bit of risk, I was getting 15-20% on a return. Had I taken same day expiration, I would have had 40-50% on some of those same moves. So I know they're more risky, but I do only trade in the first hour of the day, which typically we have enough volume to make 0 day till expirations worth it, because in the beginning of the day they have the least amount of theta decay, as well as bigger moves in the morning, more volume. You can get in and out of those positions quickly and capture the momentum. So something I'll experiment with, and I did experiment with it today. That being said, I entered on this candle. We broke out of this range and we broke below 444. I entered puts. I had a bit of drawdown on this contract as we pushed up here. I was at a loss on that had I sold, but we have this wick here that kind of got pushed down. We failed twice to break the pre-market high. We had these two bearish candles, so overall it looked pretty weak, and once we broke out, I felt confident taking that and then holding through some of this price movement. On this candle, I held through this. I wanted to see us fill the gap to yesterday's high. I sold on this candle here. Once we pushed down and got below this wick, because we had bounced from this area earlier, because we were kind of having a choppier morning and we had data releasing in the evening, it wasn't something that I really wanted to hold super long because I figured that we could get some low volume chop. So while my target was here, I did end up selling maybe a few cents off of my target. Pretty much the low of that swing when I look at it now. But that was, the contract didn't move very well, and I believe it was probably due to IV crush. We had the news, like I said, we had the news coming out today, so on the interest rate decision from the Feds. I think a lot of people were waiting that, and I think the contract didn't really move that well. Also, it's not the biggest move. It's over a 50-cent, move, but regardless, made my money back and a little bit some from that first loss. From there, the rest of the day, you can kind of see we were stuck between this range between 444 and the yesterday's high of day, bouncing off and on. Right around in here is when the Fed's interest rate decision was made. Their decision was not to hike nor cut rates. They're holding them where they are. The market, as you can see, reacted from that. We had a big sell-off. We came up and tested this zone from yesterday's high of day. Pretty nice price action and trading zone to zone. Had you taken that, we can also say that we held that 442 as support before rallying up to test that. So levels I was watching played out pretty well. I didn't trade any of this. I was at work. But just reviewing how things went. We held that 444, rallied up to test this next zone up in here, 443.3 or so at the top end. Rejected from there all the way down to this next zone that I had. Bounced off that perfectly. Pretty much just put in a series of bear flags all day. Everything since the event was pretty much just a series of bear flags. And just sold our way off through the day there. So pretty beautiful in terms of price moving level to level, finding support here, finding resistance here, coming down, rejecting off pre-market low and that 442 level, breaking down, finding a little bit of support at this zone that I had. We'll take a look at where that's from. That is from yesterday's low of day. So that's where that zone came from, that we see right in here. So yeah, zones played out nice. I would have liked to trade some of this, but like I said, I was at work, and I did get at least one decent trade in the morning. That being said, if you made it this far, I appreciate you very much. Thank you for watching. I trade live every Monday through Friday. If you feel so inclined, stop by, say hi, say what's up. Yeah, I hope you have a great day. Peace.